Hey guys, Toby Mathis here, and today we're going to talk about traps to avoid if you're a beginning investor. And I'm just going to kind of go through them real simply. I'm not going to be confrontational with those of you guys that are out there. There's a lot of folks out there that are these option traders that are just very aggressive in the market. What I'm talking about is investors that are starting to generate a little bit of an account, and they want to, they want to invest over time. And so I'm going to lay it out for you, kind of what my philosophy is and what I've seen work. And why would you listen to a guy like me? I'm a tax attorney. My firm, we work with investors pretty much exclusively, and it's both real estate, stock, and then small business owners. And we do about 10,000 returns a year. We've been doing this for over 20 years, and we could see who makes money over time, and they tend to do the exact same thing. And so we started studying those folks, and we take the characteristics and the way that they invest, and we share it. And that's part of our Infinity investing platform, is that we like to see what has worked over time, what works, and then what doesn't work. I'll give you guys the other side of this. And internally, I'll just tell you, I work with a lot of folks out there that will go out to these gurus and they'll try to learn option trading, and they believe that they're going to make 30-40% a year. And I'm just going to let you out on a secret. If these folks are making 30-40% a year, they're not teaching. They're sitting there trading because they're making so much money. They don't need to be doing this. Most of the gurus that I've seen out there, and there are, great exceptions, but they're a lot of the gurus, they focus on what they're generating, selling a program or this, that, or the other. They're not really active traders. And when I have seen their accounts, usually they're losing. So they're teaching something that's sexy and they're making good money, but they're getting you to do something that's not so sexy, right? Which is losing a lot of money, which is frustrating, right? And I wish I could undo what I've seen. I used to have these people come into our classes. They say, I'm here, I lost $300,000. And it's always $300,000 for some reason doing this option trading. I was going to be this option. I couldn't lose. And this guy's great. And he taught me this. And, oh, I didn't follow this rule or whatever. And they always kind of blame themselves when they lose. And I always look at it going, wait a second, you lost at some point, you lost 10,000, 20,000, but you just kept doing it until you lost 30. And then you lost 300,000. It's like they usually get in really deep because they might see some short-term success. And I'll tell you, when I post things on TikTok and stuff, and I'm saying, hey, my experience is that active traders lose more than 95% of the time. I'm just saying, same thing in the casinos down the road. I live in Las Vegas, and if I go down to the Strip, the casinos win most of the time. The gamblers lose most of the time. It doesn't mean you're guaranteed to lose if you're a gambler. It means the odds are not in your favor. There have been studies done over a 15-year period of time, for example, in Taiwan with day traders, and less than 1% made money. They're all doing this stuff constantly, churning. It just means it's very, very difficult. Why is it so difficult? It's because realistically, investing isn't made to do that. It's exciting. It's like Wall Street makes its money on activity. So it's lots of activity. So you're making Wall Street a lot of money. You're making all these services a lot of money. But you may have your head screwed up as far as what you should be doing. You become the gambler instead of the casino. And I want to flip that script around. You want to be the casino. You want to be in a situation where you make money the vast majority of the time. And I'll use an example of option trading. So this is one of the big traps for new investors, is they run to option and trading and they're on the wrong side of the trade. They are the buyer. I'm going to buy options. I'm going to make so much money. I'm going to kill it. Right. And then I do a TikTok and I say, you really, like, your odds of winning are not very good. And they call me names and they say, you must be a really bad option trader. And I'm just like, hey, I'm just telling you, I've seen a lot of people go down this path. 95% of the time, it's brutal for them. And if you're a guy, it's even worse. Women do a little better on the option trading than men. But I look at it, I'm like, maybe you're in that 5% if you really know what you're doing and you become a true expert in it. But for the beginning investor, it's a trap, and I would avoid it. And I would avoid being the option buyer. What you want to be, and I'll tell you why, is because you got to make money on the sale, on the time, and on the company has to go up. So if it sits stale, you lose money. So if it stays straight, you lose money. If it goes down, you lose money. The only way you make money is if it goes up. So you basically have to be right on multiple areas because, gosh, you're going to lose on two of the three, right? You're one out of three that could be successful. Whereas if you're the option seller, you only lose money on one of them. You only like two out of the three. It just seems like it's a better odd, right? Well, it absolutely is. It absolutely is, because you never know which way these things are going to go. And if you own the underlying security and you're selling an option on it, and it goes up, you can actually roll out of that and save yourself until it does start going sideways or start going down. You can actually roll yourself out of trouble. But you're still making money and you still own the underlying security. If you are just an option buyer, you lose your money like that. If that thing doesn't go up, you're in trouble, right? So that's a big trap, number one. Trap number two is the mentality of quick money. They get the mentality of, I'm going to make money actively in the marketplace. Really tough to do. The best investors on the planet, and probably the best, Warren Buffett, would say this: you only need to find a few companies and then you hold them over an infinite period of time. Like he says, his holding period is forever. The problem with a lot of people when they get in the stock market is they say, it's kind of like a casino again. It's exciting. They're doing something, but unfortunately, the odds are stacked against them to be profitable. The odds are really that they're going to spend a lot of their time and they're going to break even, or they're going to lose a little bit of money. That's been my experience. Don't shoot the messenger, right? That's just been my experience. So the mentality has to be a long-term mentality. I tell people, think of 200 to 300 years from now. And they go, wait a second, 200 or 300 years? Hard, nobody knows. I'm like, yep. So you better buy something that is paying you over time, and that your exposure really is nothing. It's going to pay for itself over and over and over again. So like if I buy a security that's paying a 4% dividend, and that dividend's going up every year, or even let's make it a 2% dividend, and that dividend continuing to escalate over years, after about 10 years, what's shocking is how much of the dividend that's being paid out, which is the profit from the company that's being paid to the shareholders, how much of that's actually paid for the underlying stock. The stock goes up, but I don't care about that. What I care about is that dividend going up. So if you're focusing on a long term and you're thinking 100, 200, 300 years down the future, it really starts to limit the types of companies you're looking at. You're not trying to bet on winners. You're looking at things that have been historically solid in the first place and will continue to be solid because of the type of business they are. You ask yourself, is Apple still going to be around? You think that Walmart's still going to be around? You think that 3M's still going to be around? Procter and Gamble, Johnson and Johnson's, these big dominating forces? Pretty much, yeah. Coca-Cola, yeah. Pepsi, yeah. Probably going to be here. AT&T, yeah. Verizon, probably. Like you're looking at these guys that are big leaders, and then you see here comes a new company, and you're like, I don't know if it's going to be here or not. They're losing money every year. It's a big bet. We're hoping that they make it through the next 5 years. They're going to run out of capital. Like you cannot project a situation where if things remain the same, that they're going to still be around in 100 years. Whereas you can project on a company like Coca-Cola that it's still going to be here if things stayed the same. And it's still paying you out. It's like constantly putting out revenue to you, which is fine. And that's what I say you should be focusing on. So as a new investor, big trap that people fall into is that short-term mindset. Last trap I want to hit, and this is the one we're all guilty of it. We're watching the market. We're watching cable TV. You're listening to these people who are doing this. Chop, 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 chop. Delta, delta, this, oh, this, it's going this, bid in the ask, and here's this. And you're looking at all these charts, and it sounds really exciting. And nobody really knows. They're all trying to predict the future. Nobody's really good at it. All these guys that are on TV, like Kramer, they have an inverse Kramer index because he's wrong so often that you actually do better if you bet again. If he mentions something, buy an inverse to it, right? Because he's wrong so often. It's not a slight on anybody. Nobody can predict the future. The problem is that you start substituting and abdicating your responsibility to these folks. They're there for entertainment. They're making their money off the advertising. They're making their money again off of the activity in the market. And the best thing you could do, the best advice anybody ever gave me is they said, take your right hand, Toby, and stick it underneath your right butt cheek. Take your left hand and stick it underneath your left butt cheek and sit on your hands. Let the companies you buy do what they're good at, which is continue to build up strength. They're paying out their profits. Like, don't buy companies that don't pay you if you're a shareholder. That's just dumb. You're giving them an interest-free loan. You're going to lose money because of inflation, everything else, right? It's not doing you any good. You can't live off of. Buy companies that pay you a dividend. Buy those companies and don't do anything. Like, maybe once a year you might want to look at something if it's cut its dividend, or it's suffered a major catastrophic event in their business. Maybe you start looking at dumping it. Otherwise, if it's profitable company and it's paying out consistently to its shareholders and it's been doing so for a long time, like, I look at companies that have been doing that for at least 10 years, 20 years, 25 years. They're called aristocrats. 50 years and more, it's called a king, a dividend king. I'm looking for companies that consistently raise the amount that they're paying to their shareholders. If your dividend increases 10% every year, that means that your dividend's going to double about every 7 years, and you hold that for 20 years. Your dividend's quite literally tripling based off of that original stock price. It's like a big chunk of money. If you had a 3% dividend and it tripled, you're getting 10% of the stock price every year. So it pays for itself over and over and over again. You hold that for 30 years, it's paid for itself multiple times. It's pure gravy. We're not worried about it going up. We just want to have that income stream. And so ignore the talking heads on TV, ignore the crappy advice. Whenever you see a kid with a Lamborghini saying how rich they are and that you should do what they're doing, you should probably be like, yeah, I doubt it. They got the Lamborghini because of guys like me buying their package or whatever they're trying to push. I made 300% last year, and I'll show you how to do it. No, they're making that type of money. They're not out there on the internet trying to schlep for folks. Why does a guy like me do it? I'm a tax attorney. I'm independent, have hundreds of properties. I just know that if I really want my clients to do well, and I want people to grow and create legacies. And that's what my firm does. We work with tax and asset protection and legacy planning. You know what you need to have to do those? You need to have money. So I need you to have money. So I'm like a barber, and I am selling you hair cream. I want your hair to grow so fast that you got to see me more. And that's what our firm's philosophy is we want to help people make money so that we can help them in other ways. And that's how we make our revenue. We don't have a dog in the fight when it comes to the gurus. If there was actually good ones that taught you how to make money, and there are a few good ones out there, we love them. They're actually teaching you the right principles. But the folks that are out there selling the snake oil and talking, and they're always jibber jabbering about these numbers and this, that, and the other, those drive me crazy because, again, 95% of the time, the clients lose money. And I don't think that's right. All right. So those are the big traps that I've seen for investors, especially new investors, is making sure that you don't fall into those. I know that for some of you guys, you might be having success on a short-term basis on the option trading. I'm not trying to say, to give it up. I would just say, understand that it could be costly and that the odds aren't necessarily in your favor, and make sure that you're doing a little bit of both. And what I've seen, I'll just leave you with this, is that traders become investors. Investors rarely become traders. So if you are a trader, understand that the holy grail is to be able to sit back and let your portfolio work without you having to do anything. And that's kind of the big objective, is to have something that is perpetual. I can't give my good trading skills away to a future generation, to my kids, for example. They'd have to learn it on their own. But I could create a really good account that's generating income that no matter what, it continues to generate income for them and then their kids or organizations that I care about. And they don't have to do anything. They don't have to know how to trade at all. It's because I purchased the right type of portfolio, it can't get out of its own way. And there's tons of examples from Buffett to Hershey. And you look at some of the foundations out there, is they're just generating so much revenue, holding passive investments that are doing exactly what I'm talking about, that are producing income. And that income is continuing to perpetuate and create more and more wealth. Eventually, you can't get out of its way. It's just creating its own. It's its own little monster, which is great. It just keeps producing income. And that's what you want to create for your family. When you create a legacy, that's probably the most important thing, is making sure they can't tear it apart, they can't screw it up, and that they don't have to have specialized knowledge to run it, that it's already set up because you were wise and you took the long-term stance. So that's it. Those are the traps. If you avoid those, you're going to be really, really, really happy. You have a much greater chance of being success. Regardless, I hope you're successful and I hope you join us at our Infinity Investing workshops. Again, they're absolutely free. You can click the link to join at any time and learn how to create an infinite portfolio.